How are you feeling about the markets these days?
That's a good, interesting question. I've been listening to your show this morning, and I would say there's much more reason to be long-term optimistic than you're hearing from some of the views of people out here today. There are two big points I would make. The first is that if you assume, as I do, that there's a high risk of recession, which is a point that Steve Leisman made today, it's the kind of recession that has historically been shallow and brief, because it's one caused by increases in interest rates as opposed to the balance sheet recession that we experienced in 2008, 2010. So I think we can get through that should be able to get through that relatively quickly, and we have a very strong underlying economy, right? Even though the print last time was nominally 1.4 negative, was really in the mid-threes positive because of the underlying economic activity, right? So I think the economy is strong. So I think that I'm concerned about recession. I think that's probably my base case, but I'm not concerned about a deep or long recession. That's kind of one. And the second thing is, Paul was talking about the 70s. Yeah. And I would remind him that Apple and Microsoft were founded in the late 70s. And some of the greatest companies of all time came out of that time period. Today, entrepreneurs are getting up, they're going to the office, they are working remotely, they're building great products, they're investing in the future, they're creating net new innovation. The creator economy is enormous. So I'm very, very optimistic looking at the point of view as a technology investor. Okay, I think we'll get through this.
Well, hold on, because I want to take you there. Bill Gurley made some comments on Twitter over the weekend, caught a lot of people's attention, including Jeff Bezos's. He kind of weighed in on some of it, too. His basic point is that you are looking at technology entrepreneurs who built their entire view on valuations based on the end of this amazing 13-year bull run, in his view. He thinks the unlearning process is going to be painful. He thinks that previous highs are irrelevant. It's not cheap just because it's down 70%. So you're right. Great things are built in these areas, but you might see valuations.
Oh, of course.
Crash
for sure.
I don't
know if they're crashing. I mean, if you look at some individualized companies, I was just looking at before I came into the NASDAQ. It's probably great to be back at the NASDAQ, too. Yeah. Important part of my business history. NASDAQ is basically where it was about a year ago. It's down by a lot, but we've gotten back to about the spring of last year in terms of the absolute level. So we've given up about a year. I felt pretty happy a year ago with where I was in terms of the value of my portfolio. So again, it's not Armageddon overall. There are some individual companies that have obviously suffered a lot worse than that. They were on the last time I was on. I said, be careful about the foamy end of the marketplace. I said, get out of that kind of stuff, because so those things have gone down, which is not hard to predict. And look, there's right now the private markets move more slowly than the public markets because they don't have to mark to market every day. So there is still meaningful overvaluations in some of these rounds of venture investing. That'll eventually correct itself. But if you're in the very early parts of a venture investing, a seed or an A round, if you invest at a $130 million valuation and 100 and the company goes to 10 billion over time, it really doesn't matter that much, right? So do I see excessive valuations? Yes. Do I think Gurley's right about the corrections? Yes. Do I think that net new innovation can, if you make the right investments, can burn through that over time and I want to be one of the people that didn't get discouraged in the late 70s. I want to be one of the people that found the Apple and the Microsoft in those days and invested in those, and I see those developing right now.